Morning movers. Right now, let's get started with Scarlet Food.
Yeah, we need to start with Research in Motion. It's been a stock that we've been monitoring quite a bit here because of some big moves. Goldman Sachs has now weighed in and has upgraded Research in Motion to a buy because of increased volatility in the share price. We know that Research in Motion has gone from 6 and change in late September to almost 12 earlier this week on competing views on whether the BlackBerry 10 will be a hit and revive the company's franchise. Who knows?
We're seeing a lot of positive remarks, surprisingly. Walt Disney jumps on the dividend train, and that's helping shares certainly rise in German trading, raising its annual dividend by 25%. It's also higher in the pre-market here as well. You cannot even count on one hand how many companies, big name companies, Walmart, Las Vegas Sands, Wynn Resorts, are raising their dividends to help investors get around these higher taxes set to kick in January. Right now, the dividend tax rate, 15%. That could go as high as 40%. If they can't avert the fiscal cliff, or even so,
Boy,
we're looking at higher taxes. And so
there's been an explosion in these
returning
special dividends as well as companies try to get ahead here. Well, let's talk about Tiffany. This was the big mover this morning. It is down by 12% in the pre-market trade right now, trading at $56 a share. I checked, that would be a 4-month low. A big miss in earnings per share for the third quarter, 49 cents versus a consensus of 63 cents. Sales also missing as well by not as much. Tiffany says its gross margin was weaker in the quarter and the tax rate was higher than expected. And interestingly enough, I was looking at sales at its New York flagship stores, rose 5% in the third quarter, but comparable branch store sales all declined 1% in the period.
And I'm sorry, we can't get through a whole hour without bringing up Europe. We can't only talk about it when bond yields are shooting higher. They're coming down. They're improving in Spain, in Italy. This is very important. Perhaps a quiet story, but the Spanish 10-year bond yield is at an 8-month low. In Italy, it's at the lowest since 2011. Things are looking up.